All right, everyone, welcome back for another episode of Carnivore Trade. Today is Friday, September 6, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here absolutely roasted again. Last 2 days we were kind of sideways. We talked about this. The bulls kind of showed up a little bit yesterday, and they defended the area that they needed to by the end of the day. So they left the door open for a recovery. But obviously, door slammed shut now today with a powerful bear move. Still really strange that the volumes has not been heavier here on the spiders really lately, even on these big sells. But we have had the volume near the lows. So, perhaps that's when we'll get that volume surge, is when we are ready to put in a low. But markets right now are in a lot of trouble. So we lost this. We lost the 50 MA, the 20 MA, and you can make a case you have basically like an island top here. You didn't really gap down, which to the letter of the law, I would say that's a better island. But either way, I mean, it's a good, you have a failed bull pattern on your hands, right? So failures tend to result in really strong moves. So you can see here the bull inside bar and the failure there, and it wasn't able to be saved today. Double whammy too, because if we look at this morning, we had the lack of follow through. We had a little quick slice there on jobs. The jobs missed. I mean, that was priced in to a degree, at least in the short run. It was priced in. It was telegraphed, is what I should say. It was telegraphed. And we started to rally up, and I said, well, this is, we might rally today because you got bad news. You're starting to rally on it, and the market is, we saw horrible jobs reports the last 3 days, right? So it wasn't a surprise, but we rolled that rally over. That's extra bearish there. So bear is in complete control. And again, we mentioned this really all week. We just lower highs, right? We just were unable to break up and get anything going. These are just bounces for selling, really, until you make a higher high, which the Qs tried to do yesterday. But again, just getting rolled here. I mean, we had that first higher high in a while, but just getting rolled here. So no previous support was able to reclaim, right? It's all just lower high. We tried to get above 55.20, and you did briefly, but you couldn't hold it. So no acceptance there, and it just ended up being just a roasting. There was a chance of getting that squeeze there at the end of the day, but you need to do it by like 2:30. You can't get that little bounce there in the end of the day. That was just again, oversold dead cat bounce. So again, a lot of GEX at, get my chair in place here, a lot of GEX at 5,400. And the 54, and that's another thing too. We talked about the 5450 level earlier this morning, and that level got run through. And I can count really on one hand the amount of times that I don't have it up right now, but you guys, you can just imagine. There is a lot of GEX there, and I can count on one hand the amount of times that we just blow through a GEX wall like that in the last 6 months. It was massive. I talked about it in the short video this morning, and usually that does not happen. We did get a little bit of a quick algo bounce. Again, you got to be careful in bear periods of these algo bounces on headlines after Waller was speaking. And again, that it looks now like the Fed's going to cut 25. Mr. Nick Chiramos, if I'm going to butcher his name, but Chimiros, I think it's pronounced, kind of walked back Waller's statements here, and essentially this is kind of what he's saying here. If I can get to his action, there we go. So Fed Governor Waller's speech doesn't explicitly say 25 or 50, but it leans into endorsing a 25 basis point cut to start, explicitly reserving the option to go faster as appropriate if new data showed more deterioration. So what they're doing is they're conditioning the market to expect 25 basis points, but they're also saying we're ready to get aggressive if necessary. It just wasn't enough, right? Just a pounce on the headline's not enough here. So I would expect 25 in September. I still think it's total horseshit. If like the media is saying that like the market wants 50 basis points, you don't want 50. Trust me, you don't want 50. That's not good. But I still think it'll be 25, and that's going to be around September OPEX. So if we're still selling into that, that's probably where we get more of a bigger relief bounce. If we're rallying into that, be careful. It's definitely going to be a time period we got to zero in on. But for now, short term, you've got the 100 MA down here. There is a level, a calculation I got at 53.40. I expect that to get hit Monday. That is some support. There's also the 618 right here at 53.25. And that's a previous all-time high as well. And I beat that level, the drum, that level a couple weeks ago, right? So I talked about this nonstop. I said, as soon as we get above that, we're going to squeeze. And we did. Went way higher than I thought we were going to, but it did. So that's a good level to backtest. And it's a 618. So I would expect to see some support there. If not at 53.40, but these things tend to overshoot. We may get some margin selling Monday too. I mean, they're probably going to pound it into the close, which they're basically doing. So we'll probably see a little bit of margin selling, maybe a margin call Monday again. I don't think we're going to do this, but we could definitely see some slicing. And then, again, maybe a late day recovery and we can put in a pivot, but market definitely under pressure. After that, there's not a lot till about 52 and change. And then you got the 200 MA in that area as well. Market set to close here in about 5 seconds, by the way. Again, the triple Qs here leading to the downside. And there's the bell. But you can see the 618 right there. I would favor closer to the 200, maybe even the 786, simply because they're leading to the downside. So I would wait for the spiders to hit. Then you obviously have this trend line here, but it has been hit 3 times already. So this can break. That doesn't mean it can't bounce at first and then break, but just be aware of that. Now, you're going to see this all over social media. I'll just mention it now. I mentioned it yesterday, but there's that fib. This is going to get plastered all over social media, and I'm not contributing to that right now. Right, this is everybody can see a head and shoulders here, right? So just be careful when everyone points out head and shoulder patterns on Qs, on Apple, Tesla, Nvidia, SMH, anything that's like a big Mag 7, anything that's a big asset that's got a lot of eyeballs on it. Just be careful, because a lot of the times they'll hit and then that ends up being the low, because a lot of people will just FOMO in short, or they'll get stopped out, and you can get hurt doing that. I'll put this in here and I'll do that. There you go. So we can just look at that there. We'll get to SMH in a second, but let's right now obviously we'll give support at the 200 for now, then the trend line, and then there's your neckline. IWM actually held up really well, kind of intraday. I talked about this earlier. Had a nice bounce. It was almost kind of leading the market a little bit as we got towards the afternoon, as we got this bounce here, and IWM bounced a little bit better. But back at the end of the day, closed below 210, right? So that was the level, and we're below that. It held the 100 MA, but really not the greatest look here. It's not broken on the weekly, though, and it's not broken on the monthly by a long shot. But right now on the daily, it's in a lot of trouble here. And again, the spider is the same thing. It's really not, so if we zoom out here, always look at your bigger time frame. All we did was retest the 20 MA on the weekly. So, let's say there's some volatility next week and we go down, right? And then we close like back up here with a hammer. Again, does it look that bad, right? So make sure you're always checking that weekly too. But right now, engulfing, well, not engulfing, but we wiped out like 2.5 weeks worth of trading. So, and possible M top there too. So again, bears in control, 'tis the season, right? All right, so we mentioned IWM, Dow holding up the best, down 1%, below the 20 MA, but still above the 50. And I'm just going to say 400 is still a level, and it held it didn't even test the gap window really. So again, that makes sense. Defensives still acting well, although I think, XLV was down again. U was down again. Everything was down, right? Good job, AT&T, Thermo Fisher, United Health, CME, McDonald's, that's about it, right? And it's funny, this morning we had 400 advancers on the open when we were up 10 basis points, and now we finished with an 85% down day, something like that. So, all right, SMH here, down 4%. So I would just say, double bottom right now is where I'd look for that to go, and then 195. So again, head and shoulder, it's clear as day. Just be careful with these, because when everybody sees it, I know I'm not the only person that sees this. And we've got a long way to go. If we start puking, Monday, Tuesday, and the VIX is blowing up and everybody starts to go short down here, like, why are you waiting for here to go short? You should be shorting, up here, or shorting on a breakdown or whatever. That's how you get those big short squeezes like this that don't pull back for 2 weeks. So let's be aware of that. But bears in control. IGV finally below that trend line on close. Again, it's not broken. Okay, the daily, let's get rid of this for now. The daily, we still held the 200 MA, and that's been a POC for a while. But, look at the weekly. It's still fine. It's still, you could make a case, if we zoom out to go to the monthly. It's kind of like a bull flag. So cloud's still really strong above all the moving averages on the monthly, but definitely weaker on the daily. If I had to pick one tech sector to be in, this would be it, though, because it's way stronger than the semis and Mag 7. By the way, Google looks like crap right now. That's actually bear market territory now. So down 20% from the highs. I have not liked that stock in a while. Some other Mag 7, I still think Amazon's a little bit better, although it had an outside move down today. I still think Netflix is pretty good. And Broadcom today down. I couldn't hold that 140 handle. That's still pretty strong, though. That has a chance to hold that 200 moving average, maybe even the 130 double bottom. Anyway, Dow Transport today, again, that failure yesterday and follow through today. So we'll see if this goes and tests this lower trend line again. I think it can. But right now, it's not going to go there in a straight line. I'll just say, you got the gap right there. Let's say like 15.2 for now. I don't really have a great level on it, to be honest. Yeah, just say 15.2 for now. All right, and so this is probably the most frustrating part here about today is I had this thesis really called since Monday in bonds. So yield, 2-year yield, don't really care about that. We know that's going down. But the 10-year, did I not tell you this was going to happen? And we haven't seen follow through yet. But if we're green outside on Monday, there's a really good chance this squeezes up. So I talked about this. We're probably going to have like a W pattern. And that's kind of what happened, or it's starting to happen right now. The long end is staying strong. So inflation expectations are possibly staying anchored. Again, we got CPI next week. See what happens there with deteriorating job market. That's kind of like the boogeyman for stocks. But again, I just think we had a terrible jobs report. Why can't yields sell off, right? Because too many people are already expecting that. Stocks didn't get the memo. What are you going to do? But yields rallying up, then got faded, then they came back by the end of the day. So a lot of volatility, and they're showing me something here. So maybe there's a trade in yields. I don't know. But it definitely showed some relative strength. I think people are way too piled into bonds. And I mean way too piled in. So you can argue about the reasoning for it, but it doesn't really matter. So 11-cent gain for home builders. So XHB holding up. It was a relative, it was a winner today. And again, weekly chart is still fine. We're above that breakup bar low. So home builders still strong. Commercial real estate still strong. VNQ down 9 cents today. I think it's flat on the week. So that's still strong in an uptrend. XLF was down too. Coming into 44, that might pierce the 20 on Monday, but I think that can get a bounce after that. So we'll see how the rest of the market looks. KRE down down $1. Don't like that. So I don't like losing that breakup bar low, as you guys know. Yeah, the weekly is still kind of there, but the daily, that's a little that's damaging. And then KBE also damaging as well. XBD outside move here, but it's still really strong. It's still really strong. Again, we would need to see follow through for an M top, but not quite there yet. But broker dealer is still strong, selling a lot of premium to both sides, and they're winning right now. Oil here, again, I got down close to that kind of 66 and change area, and then it bounced. I mean, I don't really love it. I don't hate it. It's down right now. If you were to reclaim 70, I think it could squeeze, though. But I have not done anything with that. XLE, basically down into double bottom as well. XOP, same thing. And then OIH, new 52-week lows. So this here ends up bear flag, end up playing out. It still has a lot of time on the monthly, but I would not like it if it closed below 282 on the monthly. There's plenty of time left, but just watch that level. And again, if yields do, if I'm right about yields, and they push up, that'd probably help oil. How can oil rally with these jobs day as well? Again, positioning, right? If everybody's already short, there's nothing left but buyers. Again, not predicting, I'm just saying that's the dynamic. Uranium here, CCJ down 1%, a dollar down 3% rather. Again, you got to hold this little double bottom here. It is stronger than URNM though, which is basically into double bottom. That may want to go test 34, and then NJ I still don't like. Weekly close below that pivot. So the volume there from the other day was telling. Nat gas, one of the few things that was green today, up 3 cents. Again, seasonally, it should be done. So W, maybe it goes up to 240, pulls back, and then 250 or higher. So nat gas holding up, the dollar index holding up as well. Again, same thesis, right? So stocks didn't get the memo, but that's how it goes. Recession, crash, right? Where's the dollar index? It's up, it's green. So again, positioning matters. So the bond market and the Forex market clearly priced this in. The stock market was offsides. Dollar yen, I don't know. That looks kind of tempting. If you could get a tap down and reversal on Monday, I think that could get a good squeeze. That would help the NASDAQ, but I'm not stepping in front of it right now. It definitely looks tempting, though. I think yields are probably the better percentage play if you want to try to play that. But dollar yen down 75 basis points. So crash confirmed. All right, gold here down 0.75%. Again, still bullish inside bar until proven otherwise. No changes. Silver outside move down, basically kind of an engulfing candle, down 3%. What I like though is that the miners here, they were down today, but they're still like, well, you got the monthly breakout, but they're still kind of trending up on the weekly. SIL is a little bit weaker. I think the buy in silver will come up a little bit later. Gold should continue to outperform until then. Platinum here flat to lower, not bad. And then palladium here, a little outside move there. Copper also got hit pretty good, although it didn't take out yesterday's low, but you can make a case it's bear flagging now. It's a little immature, might need a little bit more time though. And then Bitcoin here, lastly, I'm still pretty bullish on this. Also, fear greed on Bitcoin hit 22 today, so I can't imagine it's definitely going to be lower now. But yeah, could go down to 50, maybe even pierce it. I think that's probably about it for now, though. Fear greed's getting crazy on crypto here, and it's usually a pretty good indicator. But yeah, we talked about 54 area. It's there now. We'll see if it goes down to 50. Someone will probably get liquidated over the weekend. But I'm not bearish on that at all in the big picture. So yeah, spiders here, really good outside move, forceful move. And, if you can negate that break, we talked about this level all week long, 550, 5,500, close below it. Bears in control, right? Till a support reclaims, that is the case. So I think early next week, we'll probably see, like I said, 53.40, maybe 25. And then who knows, maybe you get a turnaround Tuesday, you get, CPI, we get a little relief bounce, but bears in control here, and September is definitely here. So again, until we reclaim, again, I'm just going to say 5,500. I mean, intraday is a little bit different. Intraday, I mean, we got to get above like 54.80 first. But until we get above 5,500, there's a control here. It's interesting though how they close us right on that weekly 20 MA, right above it actually. But in any case, looking for lower prices next week. And again, we'll see what we get. Don't be a hero. Let the market come to you. And usually it works pretty well. So anyways, guys, I'm going to wrap it up here. Again, you guys take care. Come find me on carnivoretrades.com. I'll see you guys all next week.